Hey everyone, this is Ben from Cheddar Flow, and this is going to be a very important video and a very important week in the market, and that's kind of why this video has a lot of importance behind it. Basically, the market has fallen quite a bit in the last 2 days, and these are very bearish candles, two very bearish candles back to back, and it looks like it's blown through both demand zones I had highlighted on here on the chart of SPX. It looks like it probably wants to make some more new lows. I will give you kind of my sense on where I see things going in this video. And then also, I just wanted to share with you some of the data from the put side on the S&P 500 and also NASDAQ in this video today. So basically, I'm going to go back to April 18th, which was the start of last week, all the way until the 22nd in our historical flow tab here on Cheddar Flow. And I'm going to click SPY on here. And also I'm going to filter for over 1 million in premium. And I'm only going to do this on a ticker like SPY because SPY is able to handle that much premium. There's very large money in this ticker, and they're able to get calls and puts with this much size on it. So I want to see what large money is doing, kind of get a sense on what's happening. And basically, you can see up here, it's 88% puts to 12% calls. That's pretty bearish just by itself from this metric. However, if we look a little bit deeper into it, we can also see it's even more bearish than we may have gotten a sense of by just looking at this top thing up here. Basically, we're seeing a lot of out the money strikes getting hit in a very aggressive fashion. It's not just one or two prints like occurring during the day. You can see just continuous amounts. You can see all these were from after hours just from Friday alone. So these people are bearish going throughout the weekend. It could be weekend hedges, but these are very far out of the money bets with a lot of premium behind it. That is not something you want to just miss and not like pay attention to as much. And if we scroll down, you can see throughout each of these days, it's just incredible. All of these highlighted ones, Cheddar Flow highlights these super unusual orders, and you can see how many there were. Like, this is crazy to see this many highlighted orders. They're just buying tons and tons of puts with a ton of premium behind each of them. And all these seem to be out of the money by quite a bit as well. You can see from 422 here, and this was also on Friday, the spot price of SPY was like 433 at this time, 434, and they were buying 414 strike, even a 400 strike over here. That's very, very bearish. It's a lot of aggressive bearish behavior behind it. The day before that, we were seeing some very large puts hitting the tape. These literally, like the puts that were bought earlier in the week before this big fall, are up hundreds of percents at this point right now. So pretty crazy, honestly, just thinking about it. Like this one, 418 up here, these people were buying 418 strikes as well on the date 418. These right here are up ridiculous amounts. Just crazy that they were able to catch it before it happened. That's why we always are looking at this data constantly, because we want to get a sense on where that downside might happen. But pretty insane how all this has happened and how it hasn't even like cooled down. Like this is still coming in at the end of Friday. So we need to be careful for this upcoming week because of stuff like this. Also, the dark pools got active again, especially after hours on Friday. We saw over $1 billion in premium for singular orders after hours on Friday, which is interesting. People may think, oh, that could be a bottom because they happen near the low of day. However, we could also see a gap down. And this is what I want to talk to you about right here. How I mentioned earlier, what is my plan on the chart. So obviously this chart may sound or look a bit confusing to you at first. But basically what I'm looking for, and I think we might get, is a potential gap down on Monday. It doesn't have to happen, but based on the amount of dark pool prints we saw and put flow in after hours, I think we might see a gap down of some extent to maybe like 4,230, roughly somewhere around that range, just based on my chart and the metrics I just showed you before. Again, doesn't have to happen, but what would be interesting if we did see a gap down like that is a potential pickup end of day. And a potential gap fill within the rest of the week. And the reason I think that we may see a little bit of strength to potentially gap fill that potential gap that we might get is because of the put to call ratio. And right now we're at 0.87 on the put to call ratio, which is just ludicrous. Like anything over 0.8 is ridiculous. We saw a previous rally happen off of that, like a short squeeze rally. Basically when the puts are just way over the amount of calls being bought, that typically is a sign that there could be a reversal coming soon, just because because the market makers don't want to pay that much in premium for the puts. Remember, when the put demand is super high, you'll see the VIX go up, and then also that means that the premium you pay for those puts is also super high as well. And nobody wants to pay like that much in premium just for volatility on there. So they'll basically resettle it by giving it a little bit of a rally off of that, and it's easy to short squeeze those people that are short in their position. So that's kind of what I'm looking at right now, a potential that could happen. And these dark pool prints could be sells that we saw on Friday because they expect that gap down to happen. We've seen this happen literally 3 times within the last couple weeks, where we saw a ton of dark pool prints end of day near a new low that the market made, and we still gapped down the following day. So it's like they knew that we were going to see that very large gap down, and they were planning accordingly for it instead of buying near the low like some people may have thought would happen. So all of this is stuff you guys need to take into account. A lot of variables for sure, but we're going to have to see what happens. As of now, this is in the danger zone. Market does not look very good with the put flow. Also, the chart doesn't look very good for right now. So if you are planning on going long, I would highly encourage that you wait. Waiting does not have to be a bad thing. You don't want to lose money by putting it in. It's probably better off to wait to go either direction right now. Let the market settle a bit before you get whatever idea you have or whatever trade you might have. Right now, the people that are thriving are the people that are trading intraday. And there are some things you can do intraday that may help. But if you are a big swing trader, which I think a lot of retail is just because of its simplicity, you could work like a normal job and also swing trade. If you are swinging, I would not encourage you doing that within the next couple of days, just because 1, volatility is pretty high, and 2, the direction is still pretty clear down, but risk reward also isn't in favor for the downside. So I have to be super careful, and these are just my thoughts for right now. Hopefully you guys took something from them. And then we'll go over to my next chart here. All right, so Apple does not look very good after Friday, especially. You can see, literally, I gave you guys a video, I think it was like 2 weeks ago, of this very important line, this purple one that I am like over right now with my cursor. This was a very important level that I marked when we were all the way up here. Look at how the prices interacted with this level that I have up here. Literally, the exact candle wick went over this level and got rejected very hard and closed down below, which ended up giving us even more selling. So basically, we were able to get below this, and it never was able to reclaim this level again. Just kept getting rejected off this level until finally the last time it got rejected was Thursday, and then boom, we shot straight down. And now it looks like we're en route to retest this level, which would be around like 156 roughly, 157 on Apple. Just we were seeing a lot of bearish force. And what's not good about this in terms of the overall market is Apple has like single-handedly been carrying this market. Apple and Google, Amazon to an extent as well. These big cap stocks are literally the only thing left that hasn't fallen quite a bit. We've seen just everything else get pummeled. Like think about SQ. Like this thing has been absolutely destroyed just a ton. As earnings coming up probably won't be as good. We'll see where it is on the chart by then. But this thing has just been destroyed along with basically everything. Shopify was the same way. All these charts have been really wrecked. But the stuff that stayed up has been Google to an extent. Obviously, we started to fall down here. And especially Apple right now. So Apple has been one of the strongest lately. But if this thing starts to go, that's when the market goes bye-bye. Like there's nothing else that's going to be able to hold that thing up. So we need to be very careful and really pay attention to this chart as well as Microsoft's as well, because this thing has also been relatively strong in comparison to the rest of the market. But Apple is the number one thing we need to pay attention to. This one, we're going to see how it retests this probably within the next few weeks. That's my assessment as of now. If we do retest it, bulls want to see a strong bounce off of this level. If it does not bounce off this level and continues lower, that is very bearish, and you need to be very careful because that's not a good thing for the general market, let alone Apple. This bounce over here, I think, is highly probable once it hits. And also that bounce may be at the same exact time as a market bounce. So you're going to want to look for Apple retesting this level roughly, or this range of like 155, 156, because that may be a sign to take a bounce position on the S&P 500 or tech for the QQQ. So this is definitely the chart that I'm going to be looking at the most in the future here for potential bounce. And then also, Looking at the flow right now, it's been pretty mixed. You can see up here 60 to 40%, not really that crazy. This is from the past week, and it's filtered up here for over 200,000 in premium. Honestly, I don't see as much of a bearish sentiment in Apple in terms of the flow as of now. We've seen some pretty bullish prints like ones here for this 177.5 for the 429, but also we've seen some pretty crazy bearish prints. So it's kind of balancing out as of now. I'm really interested to see what kind of prints we're going to be looking at for this upcoming week that may give us the signal that, hey, this thing's going to fall lower, kind of like that level I described earlier. But as of now, haven't seen anything crazy. If anything, there has been some bullish flow going into it. But I want to see what happens this week because, look, we've seen a lot of continuous bearish flow as well. So it's kind of like balancing out right now. But otherwise, these two charts, the S&P 500 and then also Apple, are going to be the ones you want to check out on this upcoming week. We want to see where that potential bounce zone may be or if it wants to continue further down. But otherwise, appreciate you guys coming out to watch this video, and I will see you guys next time.